Hi everybody, welcome to Decode Australia. Today is Thursday, the 3rd of December 2020. My name is Tamer.
My name is Yvonne.
And we're going to be starting with the Kiwi US dollar.
The New Zealand dollar slid down against the US dollar on Thursday, decreasing the price of the Kiwi US pair to less than 71 cents ahead of the release of US Michigan Consumer Sentiment Index news.
Now, currently this Kiwi is trading around the 70.58 level. If we look at the chart closely, we can see the following support levels. At support 1, we have the 69.24, which is the 23.6% Fibonacci level. Second support is the 68.44, which is the lower trend line arm. And finally, the third support is at 68 cents even, a psychological number.
And on the upside, the price of the pair may hit some critical resistance levels. If you're looking at the chart, the first resistance will be 0.7176, which is the low of February 8, 2018. The second resistance will be 72 cents even, which is the psychological number. And the third resistance will be 0.7326, which is the horizontal resistance level.
Now, we need to keep an eye on the US Michigan Consumer Sentiment news. So the University of Michigan plans to release these stats concerning this US Michigan Consumer Sentiment Index news on Friday next week, December the 11th. And according to economist consensus, this news reached a reading of 77 in December as compared to a reading of 76.9 in the previous month.
The stats for the University of Michigan Consumer Sentiment Index news reflect the level of consumers' confidence in the economic activity of the country. It also reviews the likelihood of consumer spending patterns. Generally speaking, a high reading is seen positive for the US dollar but suggests a bearish market for the Kiwi US pair ahead and vice versa.
Okay, in conclusion, considering the overall price movement of this pair in the past few days, buying the pair around the current levels might be a worthwhile trading decision in the short to medium term trading. And now let's move on to the Aussie US analysis.
The Australian dollar inched higher against the US dollar on Thursday, increasing the price of the Aussie US pair to more than 74 cents even ahead of the release of Australian trade balance news.
Now the Aussie US is currently trading around the 74.06 level. Now we look at the chart, we're going to see the following resistance levels which may cause problem surpassing. As resistance 1 is 74.13, which is the immediate horizontal resistance level. Second resistance is at 74.53, which is the high of August 9 back in 2018. And finally, the third resistance is at 75 cents even, the psychological number.
And on the downside, the price of the Aussie US pair may find some critical support levels near the listed price below. At the first support will be 0.7339, which is the lower trend line arm, and the second support will be 0.7292, which is the 23.6% Fibonacci level support. And the third support will be 72 cents even, which is the psychological number.
Okay, so we need to keep an eye on the Australian trade balance news. The Australian Bureau of Statistics anticipates releasing these numbers concerning the Australian trade balance today, a little bit very shortly. According to economists' view, the Australian trade balance news reached the reading of 5,800 in October, as compared to a reading of 48.40 million in the month before.
The Australian trade balance reflects the difference between the value of imports and exports of the country. If the export level exceeds imports, that indicates growth in the economy, while imports exceeding exports means domestic demand is more than the available internal resources. Generally speaking, a steady demand or higher export levels are considered positive for the Australian dollar, hence suggest a bullish market for the Aussie US pair ahead and vice versa.
Okay, in conclusion, given the macro economic outlook of this pair, buying the Aussie just as the Kiwi around the current levels might yield some quick profits in short to medium term trading. And also, as always, trade with your head, not your heart. Only trade with what you can afford to lose, and always apply strict money and risk management techniques.
That's right. And also don't forget to subscribe to our YouTube channel, like our Facebook page, and our Instagram at Forex Decoded. If you like our videos, don't forget to hit the like button as well. See you next time.
Thanks for watching. Bye.
Bye.